What's happening, guys? It's Woods, and I wanted to take some time to go over how I utilize the DOM, death of market, or price ladder, in conjunction with looking at areas that of interest on the charts. Now, if you're not using the price ladder, this can kind of help you pinpoint sniper entries, more so when you have the either side showing impatience, when you're showing who's impatient and getting aggressive with getting in on the orders. Now, this particular playback that on, this was from as we were going into London session, and I wanted to allow time to play out during the Asian range, because the Asian range gives me an idea of where I want to see price go. I'm also looking at it in conjunction with levels. As you can see, I went ahead and marked this because this level was a previous monthly low level. Now, I was looking for price had moved bearish the previous week, right? So the biggest move from the week before you had happened on a Tuesday, and price dropped really aggressively, and it moved below the monthly low level and then came back above it, went back to test it, and then started pulling back to fill in that fair value gap to give a great sell opportunity there. So this particular trade setup, I call this setup the Diddy. Can't stop, won't stop. It's a continuation in the trade, you feel me? So what we're looking for is for price to come back within this fair value gap right here. And we want to see how price reacts during this time so that we can get in for the sale, right? Now, we'll watch it on the chart, and then we'll hop over to the playback on the DOM so you can see how it played out when I actually took the trade. So if I go to the playback here, you see the day ends, and then we come into the Asian session. So this Asian session, this Asian range is very important for me. So right here, you see where price had moved up aggressively at the 1 o'clock hour, and at 2 a.m. as we come into the London Open, this is the kill zone. At 2 a.m. this is when I hop into the trade and we go ahead and get that drop that we're looking for. Now the drop comes down aggressively, right? We break through the bottom of the Asian range. This is a good area to take profit, but we continue as we come into the London session. Now, London session, this is the kill zone for London session right at 8 a.m. There's a very high probability that it can reverse to come back for this very important level right here. So you see price continues 8 a.m. We're coming into New York session. You get that retrace. Now, also, this is 50% of the Asian range. Price comes back within 50% of the Asian range. And then what happens? The drop continues. You know what I'm saying? So if we're holding our sale, we come right back to that 50% area, and you see price went on and continued right at doggone, that was at 1 a.m. for the next session. So it gave another sale opportunity to continue the following day. So let's hop over to the DOM and see how that played out, and it can give you some tips on how to utilize that to get these sniper entries that we also love. Okay, so now we're back on the bar chart on the DOM replay. My bad. We're on the DOM replay. So we're reviewing what's going on with the DOM as we came into price action at 2 a.m. London Open. This is what we were looking at. We had a fair value gap within this range that we were looking for price to come into. This was just above the monthly high. So I was looking to get some type of reaction as I got a break above the monthly high. And once I seen price start rejecting in this area here, building this volume profile here, that gave me some indication that they wanted to start pushing down, because the bulls started to push up, and then they started to push up within this range here, and you'll see that the bears are stepping right back in. So it's a bunch of absorbing going on. Even though there's more bulls buying right here, they're not allowing for the price pressure to push up. So if we allow the bar replay the DOM replay to continue. This is at a 200x. You'll see I got in here at the 1.3005 range. So now I'm looking for price to continue to break down. You'll see the positive delta continues to try to rise, and it's slowly starting to break down. This is at a 200x speed, so this is much more faster than it's actually happening in real time. You had price stall for the entire 2 o'clock period, and then once the 3 o'clock hour started, they actually started to break down price. Now this is when price starts to turn bearish. You see the point of control move to the 1.3008 range. I'm looking for price to break back down below the monthly high level. If it can break below the monthly high level, then we should get a continuation of price coming down to at least the daily low, the previous daily low, and weekly low levels. And you'll see I get stopped here. The price comes close to my stop here. I move my stop to the top of the fair value gap range, hoping that the fair value gap can maintain as the resistance range here. And you see you get just a bit of excess right here. The point of control builds up again. Price moves back below the point of control, and you see the bears and the bulls start to fight again. So now we're coming into the 3 a.m. candle, and price starts to break down. As you can see, the bears have now taken control. You have a completely negative delta. Yeah, more sales going on within this range here. And those that were holding within this area, the buys within this area, it's like they kind of let go within this area right here. And then you kind of see it does somewhat of a pop and drops down, breaking back below the fair value gap range. And there you go. You start getting larger orders, start to pull, start to push, and then get some more coming in there. We get price continue to break down here. And you see there's not much more bulls stepping in within this area. And you see the bears are trying to take control here with the pressure gauge. And we are trying to make it down to this daily low level. And you see price comes into the low volume area, and then it comes back within the general volume area. Kind of struggles back and forth between jumping between those two ranges for a second. And here is where you move your stop to protect your balance, because price is stalling on whether it wants to move further. I believe this was the bottom of the Asian range area that we were looking for price to break out of. It's because this is the general open area that was created once the Asian range started. So we're looking for price to break through that. As it struggles, this is a good place to go ahead and move your stop. And this is around 4 a.m. as price is going to continue as we go into New York session. And you see it start to break down here. The 4 a.m. candle. Just before we go into 5, you see around 5 a.m. is when price starts to reset, getting ready for the New York session. So you'll see price breaks down just below the Asian range here. Starts to break out to the bottom of that range. And we have take profit there as we break through, and prices start to thin out here. So this is a good indication that price is going to turn around. and try to push back up to fill in some of that liquidity that is leaving behind. I was actually continuing to play on another account, so we moved that one over from there and continued. But yeah, that's bar replay on catching the reversals and trends, man. And you just keep fading the play, man. Keep fading the play. But that's what that is, man. It's Woods. No FOMO.